Ano? Ano man?
So we're Wood State University for this virtual calculator, virtual calculator for comprehensive access using lecture This training organized review empowerment. Of course, we started first session last week. We have our topic and in the meantime, let's keep in mind the first. Please turn off your mic. In box indicate student. So already did this. Questions or concerns, not practical to and mute your mic. And there may be time. So please unmute your mic. And by ako nakapag ng internet connection namin sa school. So via Facebook and school and also if then may mga nagchat-chat. Okay. So nagchat-chat na ng school. Our program, the invocation by one of our members, Tina. Mr. Piscina and Mike. Okay.
Nagduwa na po ako. Okay na. Okay, let us bow to the Lord. In the name of the Father, the Son, Lord, for our virtual as we impart our knowledge to our participants. To our participants and understand the topic. This we ask in Jesus' name. Father.
Thank you so much. Mahina ang net sa amin. Yeah. For Philippine National Anthem. much. Please be seated. Maupo po. And ladies and gentlemen, opening Sarmiento of the Bachelor of to deliver message on behalf of Dr. Leah Viluste.
Thank you, Ma'am Rina. To our University President, Dr. Ulji Bradicina, Vice President for Academic Affairs, Dr. Josefina A. Borromeo, Vice President for Research, Extension, and External Affairs, Professor Patricia M. Candelaria, Vice President for Administration and Finance, Dr. Arnel B. Zarcedo. In behalf of our Dean in the College of Business and Management, Dr. Leah Vilustre, to the very able and humble Program Director of BS Accountancy Program, Ma'am Rina Abner, BSA Core Faculty, Ma'am Meryl, Ma'am Luz, Sir Carl, Sir Iboy, Sir Ivan, and Sir June Rodriguez, our lecturer for today, my fellow program directors and other CBM faculty members, most especially to our dear participants, students, sirs, moms, and guests, a pleasant morning to everyone. I would like to welcome you all on the second session of the Virtual Calculator Extension Project, or the Comprehensive Accountancy Learning Classes using lecture series, assessment-based training, organized tutorial and review empowerment for senior high school students, spearheaded by the BSA program. I do believe that this specific activity is very essential, especially to ABM students, enabled for you to have a deeper appreciation and understanding on accounting principles and concepts, especially nowadays that we are experiencing and facing a different setup when it comes to teaching and learning process. This activity will also address one of its objectives, which is at least to fill out the gap between accounting theories and applications with the help and presence, of course, of our experts in the field. So once again, welcome and good morning.
Ms. Chair of so finally proceed to our lecture section of the lecture. One of our senior faculty. Ladies and gentlemen, please welcome Ms. L. Medros.
Okay, good morning everyone. Okay po ba yung audio? Everyone, today's lecturer, pioneer, and program natin since many years to students now successful in management and other. So also of his successful and Rodriguez called Sir, the graduate of in Bachelor of North. Are you some uh, and other? And I just want to be able surgeon in the topic equation and the type. So let's hear for the data.
Wait lang. Share the our like search. June.
Rin, good morning. Choppy Rin.
Ano ka na po?
Mali na ang audio ko niyan, Rin.
Sir, medyo ako ang choppy.
Yeah, say mo ang choppy.
Hello.
Okay na? Sige.
Siguro po, sir.
Ma-start na ko rin. Hello, good morning po sa Gabos. Our topic for today is the effect of business transactions to the accounting equation. Our learning objective is being able to understand the accounting entity. I suppose this accounting entity concept has been discussed already in the last week's session. Maybe we can just add some more pointers. Then be able to learn the variables, elements of the accounting equation. To know the increases and decreases of the elements of the accounting equation and the related accounting terminology of these effects. Know the common business transactions and some of its adjustments. Analyze business transaction using the accounting equation and use some accounting tools in the process, specifically the T accounts. Next slide, Rin. Lorraine. Noon ako naman. Screen. Okay, let's now start with the equation. The equation is A equals L plus OE. Then we have this expanded equation. The expansion is about the OE. In the next slide, we will see that A represents assets, L liabilities, OE owners equity. In the expanded equation, which is an expansion of the element OE, I represents investments, investment by the owner. D represents the drawing or withdrawal of capital by the owner. R represents revenue. Then E represents expenses. So these additional 4 elements affect the owner's equity. Rin, pwede ako na lang pero dahil hindi ko makita. Okay, let's go back to A, assets. What is an asset or what are these assets? Assets are economic resources that provides hello, Rin.
Sir, sorry, medyo maano kasi ang net ng school.
Oo, pwede ako
Anong
na lang
slide na-
mag-slides ka ini. Para
Kung yaan po dyan.
Yung hosting.
So, pwede po. Po.
Excuse me?
Allow ko na po. I apologize po to all. Sir Joe.
Okay. Rin?
Hello, Sir
June.
June.
So ako na lang
Sir,
mga
pwede
slides.
ka na lang po mag-share ng screen mo. Actually,
Okay na?
nagbali akong device.
Ako na lang mga slides. Kaya?
Kung yan. Dahil po nga ni ako.
Okay lang po, sir. Ika-data po nga ni ako. Again.
Ano rin? Ano? Okay na? Ako na?
Tama na po ba yung
Sir?
slide ko, sir?
Ayan, ako na yan. Ako na ba?
Tama po yung slide ko, sir.
Pero ako yung ginaray.
Okay pa, sige pa.
Ako na lang. Ako na lang puta.
Sige po, mas try na lang siya.
Okay pa.
I-try ko na. I-open ko yung
Ano lang po.
Apa.
Then ako nahiling.
Nalimig ka, sir.
Pwede ka laro na lang.
Sir, name ba ang PowerPoint mo po?
Ano?
I-click ko po nahiling ang PowerPoint mo, sir. I-click mo po yung share screen, sir.
Share screen. Sorry. Ay, sorry. Ayan. Share.
Ayun. Tapos i-open mo si PowerPoint.
PowerPoint. Ayan, okay na?
Sir.
Okay na?
Apo.
Sige. Let's, ako na may control, ano? Ayan. Okay, let's proceed to the first topic, the equation. The basic accounting equation and the expanded accounting equation. In the next slide, we have the meaning of assets. A. Assets are economic, quantifiable economic resources that give economic benefits to the accounting entity. Example, we have cash, inventories. Cash is an asset because the accounting entity can use this for running the business. It will provide benefits to the business. It is considered as an asset. Then we have liabilities. Liabilities refer to quantifiable economic obligations that should be paid by the accounting entity. In the process of operating the business, or even at the start of the business, the accounting entity may incur liabilities. And under the law, these liabilities must be paid by the debtor. The accounting entity becoming a debtor, under our civil laws, the accounting entity has the obligation to pay these liabilities. The failure to pay have some legal consequences, like payment of damages. And of course, the government has the power to impose such and compel the accounting entity to pay such obligations. Owner's equity refers to net economic benefit or deficit to the owner that give economic benefits to the owner or net economic obligation. This is sometimes called the residual interest, which is determined by deducting liabilities from the assets. So assets minus total liabilities will result to owner's equity. That's why it's called a residual interest. Sometimes liabilities is greater than the assets, so it's called a deficit. If the asset is greater than liabilities, then there is a surplus or a net economic benefit. Then in the additional variables to the expanded accounting equation, I represents investment of capital by the owner to the accounting entity. By the way, going back to the meaning of accounting entity is actually rooted from the definition of the law about a person. So accounting entity must be a person. Accounting must comply with the law. So to be an accounting entity, it is being viewed by law as a person. In business, this person could be in the form of business organizations. We have a sole proprietorship, a partnership, or a corporation. And these different entities has, of course, this basic equation. It has an asset, a liability, and an owner's equity. So every person has an asset, a liability, or an owner's equity. Every accounting entity has an asset, a liability, and an owner's equity. His responsibility in operating the business is, of course, to make it sure that the assets will grow, liabilities will lessen, so that owner's equity will increase. Now we have the D drawing, the withdrawal from the accounting entity of owner's interest for personal use. So the owner of a business started the business thinking that he will earn a profit. And the profit that he will earn, he will use this for personal use. So this is, there are some questions about whether it is good to earn a profit, or maybe in terms of moral issues, whether it is morally, it is not moral to earn a profit. Of course, the answer for that is it is not immoral. We have the duty to use our talents for the good of the society, for the good of others, and not only for our own benefits. But of course, in the process of using those talents, we must also grow, and therefore we can earn a profit, and this profit can be used to enhance our service to others. Then we have, and that's why in the business also, of course, the owner can withdraw some interest or capital for his personal use. So that personal use, of course, must be assumed to be, and hopefully good, something that is good. Then we have R, revenue. So a business can either sell goods or services, and in the sale of goods or services, it earns a revenue. So this R is a variable or element of that equation, which refers to revenue. And this revenue will provide economic benefit to the accounting entity, because as the accounting entity earns a revenue, the asset will increase. And of course, correspondingly, the revenue will increase. And that increases or decreases, we will discuss later on. E refers to costs and expenses. So in earning a revenue, the business must incur costs and expenses. So there is no accounting entity that will earn a revenue without incurring an expense. So I always ask my student to give me an example of a business, or in the research to look for a business that only earns revenue without incurring costs and expense. And I ask them to tell me and to tell us, so that each of us will become wealthy without costs and expenses. So it is a must that to earn a revenue, costs and expenses will be incurred. The only issue is how much should be the cost and the expense. And certainly this cost and expenses must be lesser than the revenue, because the business will include margin over the cost and expenses to arrive at the selling price. And we go to the next slide. The next slide is about combinations of increases or decreases of the variables elements of the accounting equation, and the ultimate effect of the business transaction. Now, these combinations of increases or decreases, there could be so many combinations, but what I want to emphasize here is that in a business transaction, these elements may increase or decrease depending on the business transaction. Like for example here, in a business transaction, an asset may increase. At the same time, on the other side of the equation, a liability will also increase, or the owner's equity will also increase. So an increase in asset could have been due to an increase in liabilities or increase in owner's equity, or both. So here we can already have an idea on how to analyze business transactions. In the analysis of the business transaction, you have to know which of these variables are affected or is affected. Whether such variable or element increases or decreases will depend on the transaction. So it's very critical that you have to know whether such transaction results to an increase in asset, a liability, or an owner's equity. And of course, in the equation, if there is an increase in the asset, to balance the equation, on the other side of the equation, there must be either or both of these elements, liabilities or owner's equity, must also increase. So this is another combination. Here, an asset increase, and on the other side of the equation, the liability increase, but there is no movement in the owner's equity. Then we also have here asset increases, but the liability has no movement, and it's the owner's equity that increase correspondingly with the same value of the increase in the asset, so that the equation must be balanced. Then we have another combination here. A decrease in asset could have been due to a decrease in liabilities or decrease in owner's equity, or both. It does not necessarily mean that when we say decrease in asset could have been due to a decrease in liabilities or decrease in owner's equity, it does not necessarily mean that the reason for the decrease in the asset is because of a decrease in liability. It could be the other way around. It could be said that the liability decreased because of a decrease in asset. But in accounting, in the accounting language, which I think it's now appropriate to mention that there is such a language or term with regards and related to these increases and decreases, and this language we call debit and credit. In this debit and credit, as a tool and a language of the accounting world, a debit should always come first in a journal entry ahead of the credit. Maybe it's just a matter of presentation, because I've seen some applications, accounting applications, wherein credit is presented ahead of the credit, or even in special journals, which you will learn later on. The debit credit presentation, debit being ahead of the credit, is not anymore observed because these special journals are tabular in nature. So anyway, that will be discussed in a separate topic, I think. Now let's proceed to another combination. An increase in asset could be due to a decrease in another asset. So like, for example, the business acquired an equipment for cash. So in that transaction, so acquisition of equipment for cash, the business pays cash for such